I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name is Cody Bills. This is Logan Burgess. Today is Thursday the 15th. We have the market selling significantly. Corn for July trading down 11 cents. Soybeans for July down 18 1/4. Wheat in Chicago down 12 3/4 cents. Logan, we did have export sales reported early this morning. What did we see there?
Yeah, let's take a look here at this table. This details old crop export sales reported this morning. And as you can see here, corn generally in line with trade expectations. Not a big story there. Soybeans, quite a bit better than what traders were looking for in this report. On average, analysts were looking for net cancellations today. We actually had positive sales of 73,000 tons. But I think that wheat was the big story to talk about in today's action. 54,000 tons sold, well below analyst expectations. And if you look at weekly sales, this is the second lowest quantity of U.S. wheat sold on the old crop going back till about January. So I think that really contributed to a lot of the weakness that we saw in the wheat market today. And it's really an indication that these very high U.S. prices are starting to eat away at international demand for U.S. wheat. And now you combine that on top of what we saw last Friday from the USDA, where we did see light domestic production expected, but very large world ending stocks. I think that's the big story right now. Focus on the world ending stocks. U.S. wheat's having a hard time making sales. So I think you combine those two factors, and that's led to a wheat market which has traded off quite a bit here this week.
Absolutely. And, you know, also observing selling pressure here today was soybeans.
Yep.
And, of course, we did have that expected NOPA crush numbers. Expectations for NOPA crush were right around 132.26 million bushels. We ended up receiving, or the NOPA crush numbers came out, and we got 132.667. So we actually beat analyst expectations. It was the highest April crush in the last 5 years. So that was positive. Now, what was the reaction? Immediately, we started seeing a little bit of buying come into the market, but that buying diminished very quickly, and it was met by pretty hard selling pressure. We closed off sharply lower on the day. Now, why did we do that? I'm suspecting, really, that it has to do with the fact that on Friday, the WASDE report came out. We saw expectations of around 307 million bushel ending stocks. We got 330. So it beat to the upside. But the trade reaction to that, we ended up trading higher. I think we traded higher here because we were expecting to see China auctions, domestic auctions there for their state reserves. And we also had that anticipation for large NOPA numbers. And I think once we get both of those behind us, those two items were uncertainty. Once we got that uncertainty behind us, I think we started looking more at the ending stocks that we saw on Friday. And not only that, but Informa came out, and they had revisions to their acreage estimates. They revised to 82.1 million acres USDA compared to the USDA, which is 81.5. So higher than the USDA. I think all in all, it's really kind of turned more of a bearish focus. That's one of the reasons why we saw selling today, and I wouldn't be surprised if we saw a little follow-through selling on Friday.
Yeah, you know, corn, let's just hit on corn here for a little bit at the end of the show, Cody. We did see a relatively weak day for the corn market here today. If we pull up a chart of the December corn contract, you can see that here, once again, we made a pretty strong move to the downside in today's action, and largely this corn market didn't have a lot to go on today. Relatively quiet compared to what we saw for wheat and soybeans in particular, but given the relatively weak technical environment, as we know, to start off this week, we broke through that trend line we've been watching for a while, so it seemed like the bottom fell out of the corn market a little bit today. I guess keep an eye here on this price level of 485.5. That seems to be an important price for the new crop corn contract. That was tested back during the month of March, so keep an eye on that here moving forward. But it seemed like corn was content following the wheat market lower today in a generally weak technical environment.
Absolutely. And when you compare both corn and soybeans, it's interesting to note that both of them came out, and ending stocks on Friday's WASDE report, last Friday's WASDE report, we saw ending stocks higher than expectations. Now, corn has been kind of trading down ever since.
Yep.
Soybeans was able to hang in there. I think the reason soybeans hung in there was because of that uncertainty,
right,
because of those items, NOPA crush and China soy auctions.
Yep.
For the most part, those are behind us now, and it seems that both of them ended up trading lower here today.
Yep.
It's going to be interesting to see what happens, but I wouldn't be surprised to see more selling pressure tomorrow.
Absolutely. Well, here in the Grain Hedge office today, talking to producers, it sounded like out in Illinois, Indiana, some rain was hitting, a couple down days here. If you want live quotes out of Chicago when you're able to get back into the field, visit us over at grainhedge.com. You can sign up for a 2-week, no-obligation trial of our iPhone, iPad, Android, or tablet trading platform. If you have questions about that, give us a call at the office, 877-472-4607. Thanks for joining us here on a Thursday. We'll see you tomorrow to wrap up the week.